getting the YouTube stream ready. If you didn't know, I also stream to YouTube, but that is delayed. I think it's like 15 or 30 seconds, so you guys are still on the live side. But if all right, and welcome in YouTube. Alrighty. So it looks like before I start, if you guys have any ticker requests, go ahead and drop them in. We'll filter them through. While we're going through here. So we're going to go top down. So first off, I don't quite remember why I have, oh, it's just one. Where's my swings here? Here we are. Ooh, holy, was that Oxy? Let's go, dude. Why is my thinker swim? There it goes. Ooh, Nicole, thank you for the sub. Oxy, huge day today. In force on the weekly. Let's go through the swings real quick. So PCG is the only one that's kind of meh. Intel flat, KMI, huge week, huge day already. Bank of America, trend for 125, alert that. So already, I can't wait to see what Oxy's at. Oh yeah, PNL day looking freaking good. Probably gonna trim Oxy. Wait, what? How is Oxy still down 7.5%, bro? That's crazy. Okay, PNL opens flat pretty much. So Intel, PCG, KMI. That's the one I was looking at. I'm gonna trim that. Trim. Wait, what's this? So I could probably get 1.4 out of it. I did get 1.4 out of it. Nice. All right, so swing trim, KMI, 417, 28 call, 1.4. Sleepy Kills, thanks for the sub. I think for some reason, my chat is only working on YouTube. So if you send a message on Twitch, please let me know. Let me see if I can get it working on both. I think I pay like $50 a month for Streamlabs to do multi-stream. Let's see if that, oh, it did send, nice. YouTube not delayed, we just listened slow. No, you're delayed like 15 seconds or something like that. There's a built-in delay in there. Cuz it's not like a direct stream. All right. So anyway, we get back over here. So yeah, Oxy looking great. We were looking outside week last week. This week is just a 2-2 continuation now. So the signal here was a 2-2 rev on the week, or sorry, a 2-1-2 on the week. So stop loss, right? Here's how we would set this up. Trigger, stop loss. So here's the next TP. Take profit. And our stop loss this week moved from the previous stop loss because obviously we're not going to let it go all the way back there. Now we can either do one of two things. We can move it. Let me focus on this so you guys don't see all five. So we can either move it to prior week low, which is what I am inclined to do right now. What we have to keep in mind is we are in force here, right? Above this line. I don't know why it did a trend line. Let me do a ray. So we are in force above 48.48. So as long as we're over 48.48, technically that was an add on those contracts, or should have been. I don't know when we just wicked over it yesterday and we gapped up today over it already. So I shouldn't say gap. There is a little bit of a gap there. But anyways, so as long as we're over 48.48, there's no reason to get out of this trade. Now, if it does get under 48.48, this is no longer in force. And so where that gets really tricky and sketchy is if it gets under where I'm probably looking to get out. But definitely what you could do is if you want to trail 46 from the prior week low, 46.51, you could trail up to the current week low, because then this would be a red candle and would ruin full time frame continuity. And so you're having a pretty tight stop loss here and a pretty good risk to reward, right? This is how a strat gets good risk to reward. So initially our risk to reward was like this, right? Not like the greatest risk to reward. Obviously we're targeting this liquidity up here, so it looks good, but let's say that this is really how you would set it up. So not the greatest risk reward, but what happens is as soon as you trigger, you can pull up to current week low, and then now that turned from a 0.5 risk to reward to a 1 risk to reward. So that's kind of what I'm looking at Oxy. Intel's a little tricky goober. It wants to just act like a little goober and kind of wick around right now. So stop loss is prior week low. If I can get it. So 23.49. The reason is because that would be a failed 2 up, 2 down rev. Not down for that. The trigger was a 2-2 rev, failed 2 down, 2 up. It went and hit price target. I'm guessing my entry was somewhere up here because I'm down like 70% right now, 75%. But as far as the chart tells me, I'm not invalidated yet. This is a case where I chose to hold through this last weekly candle because my stops were sitting here, and this is a gap fill, right? So if price were to come back and fill this gap, I'm expecting it to go pretty much straight from 23.13 down to 21.13-ish, 21.10. And I'm not going to be in for that. Contracts will go from down 75% to down 100% real darn quick. So yeah, that's where my stop loss was last week. And then I'm looking this week, like I said, on the prior week low. Deontay, should we wait on consumer sentiment before trading? If it's red folder, yeah, but I've been actually pretty bad at looking at that lately, so I should look at it. But yes, typically wait until red folder is out. KMI, like I said, good weekly candles. This was a 2-1-2 up with energy. Bank of America, same thing. Bank of America is risk free. This has like what? Today's the 25th. So this has the rest of this week. So 1, 2, 3, 4 weeks until expiration, and I have the 44 calls. So, if those go up to 47 by April 17th, I'll be $3 in the money in those contracts. I don't remember what I got them at. Let me look. Those contracts would go from 46 cents to $3. So it's worth holding runners through that. CC, my YouTube is Expo Jesse. Or it might be Jesse Anderson on YouTube, which is my real name. But yeah, it has all my educational content and whatnot. Let me take a look now that it's 9:45 at futures. My widow futures. Not super clean here anymore. So we're looking like my first, not indicators, Control Z. My first thought here is that we're making a lower high. The question is, where is the end? Right? So I'm thinking we're probably going to come up to the golden zone and then maybe retrace from there, but hard to say. Kind of a tricky section here. Tricky zone to be in. As far as the daily candle, we're doji right now, so really could go either way. We're 2 down, and so some important levels to note, other than, of course, the orb and pre-market high lows, is this 50% level. So I'll actually do it on QQQ because that's what I'm going to primarily look at while I'm trading today. So we are failed 2 up right now on the Qs. And so the level to look at is going to be that 50% retrace, because if we hit that, we're looking for an outside day and maybe even a gap fill. So 487.96. I'll put array right here. Toss this over. So if that hits, then it's certainly looking bearish. Dropping down to lower time frames here. Let me scale to fit price. There we go. Yeah, we're looking a little bit bearish right now in the hourly as well. It's not a whole ton of momentum with it. Let me look at the internals. So most of the market's green, but flipping to red. Tick is flat in the middle, so not a ton of volatility. Vol Q is pretty much flat, and Vol D is pretty much flat. So we can see a day like yesterday, Vol D, Vol QD, pretty bullish. Then we come over here and look at yesterday. Actually a kind of gross day, but pretty bullish. Actually a pretty darn gross day. What time does consumer sentiment come out? 10 o'clock usually? Wait, there's no... Oh, consumer confidence. I think that's different than consumer sentiment. I think consumer sentiment is red folder. But yeah, if it's not red folder, I don't mind trading through it. Yeah, it looks like we got GDP quarter over quarter on Thursday, unemployment Thursday, PCE Friday. Next week is Jolt, and I would guess NFP. Yeah, NFP. But all right, this one I want sessions. There we go. All right, let's look at options for the day, see what we're doing across the board here. Do sometimes like the black background, a little easier on the eyes. But I think for swings, I got to keep it like this. I don't know. We'll see. I'm flipping back and forth. It's also, I think, psychologically easier for me to think price target to price target when it's just black background and nothing but wicks and candles, but who knows? Was that a reject a prior day high? I don't know. That's tricky, right? Because technically it is, but we already broke through it. So, like, this is a pretty key candle. If we break through it again, then I wouldn't really look at that as like current resistance or support. I would look at it as past resistance. And so what that means is instead of me thinking that, hey, there might be 1,000 orders sitting there to reject, I'm more thinking like, hey, previously this is where price battled. Does that make sense? So it's not like I'm thinking that that's a rejection area. It's more of an area that I want to say might reject, but there's a difference there. Like, it's not going to get respected to the tick like it would be if there were resting orders there. I would be long right now. Why is my orb not showing up? Oh, it's because it hasn't found a bottom yet, really? Oh, it's because it's so tight. Gee whiz. Two minutes till news. Orange folder, but nonetheless. All right, let me look through here. So HXB looking short. Same with material. Material's kind of split right now. Let me get rid of these. Communications is interesting. Energy continuing to go up. Financials continuing to go up. Industrial, kind of a little more sketchy. Tech, a little sketchy. Oh, XLP, that there's got to be something short here. Kind of same story with utilities. News out here. Getting some wild candles. Feel like this next 30-second candle is pretty big if this is a 322 shotgun or if this is going to go south. Sitting right under 20,400. All right, back to this for a sec. Have that on my other monitor over there. Healthcare, not I'd be bullish, but not incredibly exciting either way. All right, I'm watching this now. See if this pushed vol D volume at all. Not really. I'm eyeing this short for a breakout, but could be a little premature. I don't know, getting a little dicey here. Bouncing off. I think these are quarterly lows. Yeah. Back into the low of the opening range. Kind of important to zoom out here. We're still in this opening range. Just sideways right now. Nothing to do in the middle. now looking bullish. Getting above this open range high. Okay, back in the middle. Well, while we're figuring this out, let's get back to swings. Oxy now green. All right, oil, gas. Just my eyes are at the top right chart. Just looking at the weekly, seeing if there's anything that will go with full time frame continuity. So here we have retail. Right, retail's making a Browning formation here. My little magnet. Boom. 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 Right, drawn right to left. Right to left. So we're at the bottom of this broadening formation. Red on the week, red on the month, quarter, and year. But if we're going to go up to the higher end of this, then this would be a low risk, high reward trade. So I'd say green on retail here. The reason why I'm not saying the same thing on XLU while XLU is looking red is because XLU has its own broadening formation right here. And they're kind of in the middle of theirs. And so I'm expecting XLU to do something like this. And then maybe looking for a long to go to the other side of the range. What do we got here? Nothing. It's a kind of a similar story here on transportation, although I'm not loving the weekly chart already. This one's interesting. I actually don't know what's in this ETF. MSCI World Minimum Volatility UC ITS. Let me look up. Snap, GoDaddy, Cloudflare, Car Gurus, Snowflake. So GoDaddy's kind of the only one there. And I don't even know if I want to trade that, but I'll mark it. All right, that's all the ETFs I use. Consumer confidence came lower than expected, but market's still holding up. You know what that means. I don't know. This doesn't really look all that strong for me. This is just kind of weak sauce. Like, this is just not really going anywhere quick. Getting back in the middle, CRM. I'll gladly look at anything other than that. CRM long. I don't know. I would be long at least for short time frame, CC. Short time frames. Yeah, this would be one of those low risk, high reward trades, right? So you're obviously expecting that this fair value gap held. Boom, boom. Kind of didn't already, but you could say that this one here. Where am I? Oh man. That one there would hold. So you're kind of calling your bottom here, right? So you're saying this is the bottom, buying here. Really, I would have rather bought $7 earlier. Stop loss here. TP at least to these highs. But that's kind of what you're looking at, right? So I think it's a low risk trade because the quarter it's still inside. So if it's going to break the other side, you're kind of catching the bottom. But if it's not, then I'd say this is a trade you have to win, 25% of the time. And you have to hold your winners for a good amount of time. This isn't a trade you would trim winners at 10%.
puts because you think it's going down. There's a lot of you could set a stop loss. So if we're over here on TSLL, which is um, the one that I'm in right here, I could say, um, like I had purchased here, it dropped a little bit. We're now retesting and pushing up above the CMA, kind of looking like we're gonna continue up. That's why I'm in it. You might right click here and do a sell stop at 1933. We're gonna perform, but keep my positions and my chart on blue. So what that's gonna mean is if I click on the 596.
All right, are we finally breaking out here, Q's? What's kind of tricky with me is that Q Vol D or whatever Vol DQ is kind of flat here. Now it's picking up a little bit. What's the one I said that there's got to be? Oh, consumer staples. XLP. Where are you? There you are. Yeah, this is one that I'd be interested in. The only thing I wish on Procter Gamble is that I got it this morning on the 212 down. This is feeling a little bit far out. Still flat. Still stuck in the middle, guys. If you have any questions, any charts you want me to review, maybe losses you took you want me to review, I'm willing to do pretty much anything but take a trade right now. This is like Microsoft kind of looking interesting, but other than that, man, this looks disgusting. Futures too. Can you briefly explain the two up, two down? I will, but what I'll do is actually explain two twos because it doesn't matter which one is which, right? They just have to be opposite because we don't do two revs, or sorry, we don't do two continuations, right? We just do two revs. So the idea is that I'm looking at, let's go here. So the foundation, that the principle that everybody needs to know when they're trading is this: we are always going somewhere to go somewhere else. Okay, keep that, write that down, etch it in your mind, whatever you need to do. We are always going somewhere to go somewhere else. We're never just going aimlessly in the market. We're always going to liquidity to find more liquidity, right? And sometimes what happens is you have a chart that looks like this, where we kind of just go up, right? But in here, you see how this isn't just green candles? If this were just green candles, that would mean the market just goes up and there's no balance in the market. There's no liquidity being driven in the market if every one of these candles were green, right? And that is why this period here, this should scare a lot of people, quite frankly. The market went up 50% in 16 months. 50% with almost no retracement, right? When I teach Fibonacci's, I say that price needs to come to the 0.382. Right, let me get my lines here for everyone. Price needs to come to the 0.382 for a strong trend. If you're going just to the 0.236, that's a pretty strong trend, but almost no retracement, right? Everyone's buying a little bit higher than they want to right now. And they're doing that the entire market pretty much. We had this little flash crash here in August, right? Where this is a perfect example of what liquidity is. We came down, we wicked. Look how huge this candle wick is right here. That is taking liquidity to go somewhere else. So we went and we took out, and this is strat methodology, we took out these guys and these guys. If I go down to a weekly chart, we took out these guys and these guys. Sorry. Started here. Took out those guys. These guys. This is kind of like a mini pivot machine gun, which is where we have just a ton of green candles, two ups, and almost no red candles to balance the market. And so when we get one candle that takes out all those stops, it looks like a machine gun. It's taking out all those stops. You see it right here. This is COVID, but same kind of concept. As soon as we came up and took out this low, didn't take very long for us to also take out this low and 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 this low, right? This took us 14 months to find that price action, and it took us 2 months to get rid of all those stops. Okay. So that's kind of how the market runs, right? Which is foundational to understanding why a 2-2 works and really why any of the strat signals work. So a 2 down, let's say that this 2 down, 2 up rev. So these two candles here, take off my magnet. So if I am in the market and I'm trying to get rid of this arrow tool. If I am in the market and I'm running a hedge fund and I want to buy $1 billion of SPY, but I don't want to buy it at 450, which is where we are right now. Hypothetically, in this scenario, let me go back a couple. I want to buy it in this fair value gap, or maybe even lower, depending, right? So I say, okay, I'm going to push price down. I'm going to sell SPY, which is going to cause retail and other algorithms to be fearful. Oh my. And this is kind of how it's working out, right? So we're going day by day. And a 2 down is telling me, okay, we took out the lows, right? So everybody who was long had to cover. And when you're long and you cover, you're shorting. You're selling shares. When you're short and you cover, you are buying your shares back. And so a 2 down, 2 up is saying, okay, this candle, everybody who was long got stopped out short. And then this candle is saying, okay, everybody who was short is now getting stopped out. And pretty much a 2-2 rev is saying all these suckers who thought that we were going short on this 2 down are now going to have to cover. And when they have to cover, they have to go long. They have to buy their shares back. And when they do that, this is going to accelerate price because I'm buying, you're buying, the short guys are buying, and everybody is going to be buying. That's the thought process behind a 2-2. The thought process behind it works for anything, right? A 3-bar, the process is the same thing. We're taking liquidity to go somewhere else. A 2-1-2. We took the liquidity. The inside bar was kind of that compression candle. Didn't know where we were going to go. We built up generation and momentum, and then that next candle, boom, we're going somewhere else. So, like I said, the foundation behind any strat signal is that we are going somewhere to go somewhere else. And it's our job to figure out if we are going somewhere, which is where you'll get faked out, right? Are you part of the going somewhere or are you part of the going somewhere else? We want to be part of the going somewhere else. Like here, if we were to short SPY right now on the monthly time frame, I would be pretty darn comfortable with that. Right? A failed 2 up, 2 down, which tells me, hey, last month we weren't able to hold over the prior month's highs. And then this month we actually are going lower than prior month lows. So I'm seeing a little bit of weakness in the market. I think I'm going to short the market. And your stops are 31.7. And then now your stops are current month high. So your stops are only 15 points. And you're looking for all of this liquidity to be taken out. Or at the very least, what I'd be looking at is for a solid retracement because we haven't had that yet. Right? So I'd be at least looking at the 38.2, which would be a 1 to 4.5 ratio. So a lot of rambling there. I'm really, when I teach, I'm trying to say as much as I can so that say the same thing in different ways so that hopefully one of my verbiages makes an aha moment for you. And so we can do that on any time frame. You know, some people like Paper only does it on the daily time frame is all he's really looking at. But I can look at the 5-minute chart and he'll agree. You can look at lower time frames and say the same thought process. Like this failed 2 up. We went somewhere. Now the question is, did we go up and fail because we're going lower? The going somewhere else part of that equation? That's what I don't know, and that's why I'm not in a trade right now. But I'd be very tempted to be going short right now, more than long, based on that last 5-minute candle. So, like I said, the number one phrase you need to know and keep in mind, somewhere to go somewhere else. We are always seeking liquidity, from liquidity to liquidity. We're never just, price is not random. Can you look at BMY? Sure. Bristol Myers long. Oh my. This chart looks pretty gorgeous there, KK. You might have just gotten me a trade. And these are actually pretty cheap. I might go further out though. Thanks, Jesse. None of what you said made sense, but I also only made it to 11th grade in Cali. At that, I did just record the whole explanation though, so I'll be watching it over and over until I get it. This is a whole new concept for me, and I appreciate you talking. Yeah, no problem at all. I love to teach. I do, something you'll notice with me is I do get rambling a little bit, but that's just because I'm trying to say what opened my eyes in each of my along the way. I will say number one is that the strat made me profitable as a trader. I was using anything under the sun before then, and it wasn't until I learned strat that I actually became profitable. I would say I was like teetering the edge, but strat was definitely the strategy that flipped me profitable. And the reason is because of everything I said. Like, it's so simple when you really when you allow yourself to understand that it is so simple. Like, you don't have to understand how the algorithms are coded, or like which fair value gap to take. And I'm not knocking ICT traders. They, some of them trade better than I do. But for me, ICT didn't make sense or as much sense as strat did. Strat is so unbelievably simple, but can be complex at the same time. But you don't need it to be complex to make money with strat. You just need to understand what the colors and the numbers mean. And then you can kind of, while you're looking at like price and saying, okay, that, I'm starting to put things together. Like a two down means that we took out the prior candle's lows. What that means is that There weren't enough buyers to hold price above those lows, so now the sellers are in charge. But then the next candle were a two up, so the sellers are no longer in charge. So you kind of go through that thought process, and it's just an easy way for me to look at price, and without even having a ton of knowledge on each individual stock, kind of seeing who's in charge at the moment. So, like I said, it can be unbelievably simple. When we teach it in the School of Gains, it's a 1 day event, but it could be much, much longer if we wanted to get into the weeds of it. But you don't need to be in the weeds of it to be profitable, if that makes sense. Just the more you get into the weeds, the more it's more about the more losses you avoid the further you get into it, but you're still having an unbelievably high win rate compared to most of the market with strat. And not just win rate, but win rate with good risk to reward if you're pulling stops up, like I talked about earlier in the session. And then also, I know you said you recorded the concept there. You don't need to record them. When I'm able to stream on YouTube, it records and saves under the live section on my channel, so you can just go back in there and watch that way. So that doesn't take up space on your drive, or you can watch on your phone or what have you. KK, I think I'm going to get in Bristol Myers. That was a pretty attractive chart. Billionaire. I'm working on some swings right now. Yeah. KK said he took the 2-2 rev. I thought it was inside bar weekly. No, it wasn't. It was 2-2 rev. Jesse, how do you avoid IV crush when taking options trade? I just got crushed on BMY. What? How'd you already get crushed? Did you take it? Yeah, I don't understand. It's a swing trade, right? How are you getting crushed already? It's barely red. I definitely would I would not be buying Bristol Myers weekly contracts for sure. This has an ATR average weekly range of $3. You're targeting the 63s. So that might take a week, right? We buy 2 times what we think it needs. So at the very least, this should be a 2-week expiration. When's the next school games and how do I get in? Open a ticket and just say that I mentioned it, and then I think Paper will have some info for you. Just say I mentioned it in the live stream, and he'll know what to do from there. Okay. KK, it's a 2-week expiration. Don't understand how I'm down 35 from when I long this morning. What time exactly did you go long? Because the implied volatility on this is 20%, so I wouldn't call this IV crush. She probably just bought the top. But also on this, I would be probably looking at like May expiration, May 16. These aren't very expensive. Like a 65 call, that's the one I'm eyeing right now. You're buying at like 118 for $4 away, and you get 5+ weeks for this to hit, probably 6+ weeks with everything green. That's the one I'm eyeing. I'm not eyeing next week because, like, what strike did you get, KK? What dollar strike? Yeah, I got the 65 is 117 for me. I wonder if I can attach my chart to the bottom. Ah, sucks. I guess I should mark up this chart though. Okay, BMY and then PG you got. The 516 150 puts or what I'm eyeing. Those are at just under $1. Good average here. Now they're just at $1. Pretty widespread. So I'm going to mid here. $0.99. PG is looking bloody. Monthly just went outside bar. So reason I'm getting May, other than that, I like to be further out expirations as of right now, is because I'm looking for April to go 3-2 down. So let me get rid of this guy. That was trigger. Really looking for that. Stop loss prior week high. Sell stop NQ 7150. Just triggered short 50 points. Giving this short a try. $24.71.50. Not a fan. See how this 5 minute closes will be pretty important. Only thing that's above its orb right now with some force is Apple. This is just going to get cut for time's sake more than, like, I just don't want to be stuck watching this. I'm only down 14 points. Not even a quarter. Well, I guess it's a little over quarter R. Like, look at SPY, though. I don't know. Not a really great moving day from my perspective. Just a slow grind up. Apple's the only one that's moved higher. Everything else is either in its orb or lower or at its orb. So it's like just not the sexiest movement I've ever seen before. Everything's looking pretty decent here. Oxy's falling a little off. I don't even know what strike I have there. Let me see. 50s. Yeah, those will be fine. So just going to let things run. NQ coming back to break even, deciding to be a good little kid. Alrighty. I'm going to let this play out for now. No idea how long it'll play out, and I got to take the baby from my wife so she can sleep. But I will be here tomorrow. So added into PG and Bristol Myers for long dated swings. Currently in futures shorts, nothing day trades. This is just not looking great to me. Yeah, I would need to see something pretty darn attractive in the afternoon for me to take anything, and I don't typically trade afternoons anyway. So probably going to leave it there. I love you all. I'll see you here tomorrow morning, same time. Let me get caught up here real quick. I think Robinhood screwed me. I bought at 85 cents per contract. The maximum price a contract reached today was 72 cents. Well, number one, Bristol Myers is a wider, the spread is wider, I'm pretty sure. So you have to limit in. You really, on swings, you should limit in almost always. Like you're not really trying to get the best average to the cent, which is why people mark it in, is if it's moving, they want to get their best average. But yeah, like right now, the 150 put spread is bid 102, ask 112, so a 10 cent spread. So you would be limiting in at 107. And so you probably, number one, bought the top, but also you bought the market. And so you bought someone's ask. So you can either play it out or try to get a better average. Billionaire mindset, buy at 122. Not sure which one you're talking about, but it's all up to you. I just share what I'm doing. Make sure you always do your own analysis. Morning, Miko. Morning, Jesse. Is it all right to have less theta on BMY calls? I don't know what you mean. The BMY calls, if you go further out, they're not going to move. And the theta here is 2 cents a day. So you're losing $2 a day. That's pretty, not going to get less theta and have it also move for you. So the answer is, I don't know. You can do whatever works best for you, but that is the contract I chose. All right. Check this chat. CC said, thank you. You're welcome. Nothingness said, thank you. You also are welcome. Alrighty, guys. I love y'all. I'll see you here tomorrow. Have a great rest of your day. Trade safe. Use stop losses. Don't play your count one trade. That's silly. See y'all here tomorrow. Definitely trade safe today. This is not looking like a blowout top or bottom day. It's probably just a liquidity generating day. So, alrighty. See you guys. Trade safe.